Every empire believes its gold will last forever. Every emperor, every king, every president gazes into their treasury and sees permanence, a fortress of wealth that will stand the test of time. But history tells a different story, and right now, that story is screaming at us through a signal so clear, so undeniable, that ignoring it could be financial suicide. Gold has shattered through 4,000 per ounce for the first time in human history. This isn't just another price milestone. It's not a temporary market blip. This is the monetary equivalent of a fire alarm blaring in a room full of sleeping people. Because when you understand what this signal has meant across the ages, you realize we're not just watching numbers rise on a chart. We're witnessing the early tremors of the same collapse that has ended every great empire before us. The pattern never changes. An empire grows powerful. It builds armies, conquers lands, promises endless prosperity. The gold flows in, the currency looks strong, and the people believe the good times will never end. Then, quietly, the math stops working. Wars drag on, costs mount, debts rise, and slowly the empire begins feeding on itself. The gold signal starts flashing. Those who notice early survive. Those who ignore it become history. What makes this moment different from every crisis you've lived through is this. It's not about one nation or one currency. It's the entire global monetary system flashing the same warning lights that appeared before the fall of Rome, the bankruptcy of Spain, and the hyperinflation that destroyed Weimar Germany. Gold's signal doesn't lie. It never has. And today, it's telling us that 2026 could be the year everything changes. Let's go back to where this pattern began. The Roman Empire once believed it had solved the problem of money forever. For centuries, their silver denarius was the world's most trusted currency. Soldiers carried it into battle, merchants accepted it across continents, and families saved it for generations. The coin wasn't just metal, it was confidence made tangible. But running an empire costs money, vast, endless sums of it. Legions needed pay. Roads and aqueducts demanded labor. Enemies pressed from all sides. By the 2nd century after Christ, the empire's revenues couldn't keep up. So Rome discovered a trick every collapsing government eventually learns. If you can't raise more silver, you can simply make each coin contain less of it. Under Augustus, the denarius was 95% pure silver. By Caracalla's reign it had fallen to 50%. By Gallienus barely 5% remained. The people could see it, they could feel it. A coin that once held real value had become a bronze disc coated with silver paint. Trust evaporated. Inflation exploded. Prices for essentials soared. A loaf of bread that once cost 1 coin now cost dozens. Soldiers demanded higher pay. Merchants stopped accepting the coins. The economy collapsed into barter. The more confidence eroded, the more coins the emperors minted, thinking quantity could replace quality. But it couldn't. Rome entered a death spiral that lasted half a century, until its economy and military were too weak to defend its borders. And yet, one thing remained constant: gold. While silver debased into worthlessness, gold held its power. Those who saw the warning early, who converted their wealth into gold, preserved their fortunes. The rest lost everything. Fast forward to 16th century Spain. The Spanish Empire controlled more gold and silver than any kingdom in history. Treasure fleets from the New World brought oceans of bullion to its shores. Spain should have been the richest, most powerful nation on earth, forever. But the empire collapsed under the weight of its own treasure. The problem wasn't the gold itself. It was what Spain did with it. Instead of investing in industries or innovation, it squandered its wealth on wars, luxuries, and imports. Spain became addicted to its treasure ships. And when those ships were lost to storms or pirates, the empire's debts became unbearable. The empire that owned half the world's gold declared bankruptcy. 4 times in 50 years. Once again, the gold signal had flashed. Gold was flowing out of Spain faster than it arrived. Prices were rising uncontrollably. Those who stored real gold outside the system preserved their wealth, while the empire collapsed around them. The same pattern appeared in Weimar Germany. After World War I, Germany began printing paper marks to pay war reparations. At first, it seemed manageable. Then it spiraled. By 1923, a loaf of bread cost 200 billion marks. Citizens carried wheelbarrows of cash to buy food. Their life savings evaporated overnight. But gold told a different story. As paper collapsed, Gold's price in marks exploded into the trillions. Those who converted early survived. Those who trusted the paper lost everything. Now here we are again. Central banks around the world are buying gold at record speed, over 1,000 tons per year for 3 consecutive years. China is stockpiling it while cutting exposure to the US dollar. Russia is doing the same. Even Western nations are diversifying into gold. This isn't coincidence. This is the same pre-collapse behavior seen in every empire before the fall. Central banks are the ultimate insiders. They see what's coming long before the public does. And when they start hoarding gold while publicly claiming everything is fine, that's when you should pay attention. The math is brutal. Global debt is at the highest level in human history. The United States alone owes over $36 trillion, growing nearly 9% per year. At that rate, it doubles every 8 years. No economy can survive that indefinitely. Each crisis is met with the same answer: print more money, lower rates, add more debt to solve the debt problem. It's the same mistake Rome made with silver, Spain with treasure, Germany with paper. Different centuries, same illusion, that wealth can be created by printing it. And every time gold has sounded the alarm, gold's surge isn't speculation, it's not a bubble. That trust in the current system is breaking. When gold rises, it's not celebrating, it's mourning the death of confidence. Analysts now forecast 5,000, even 6,000 gold by 2026, and that's conservative, because only half of 1% of global financial assets are in gold today, compared to 2.7% in 1980. If gold merely returned to those levels, demand would exceed all the gold ever mined in human history. The only way to balance that is through far higher prices. The signal isn't just flashing, it's blazing like a beacon through the dark. Every empire in history has faced this moment. Every empire that ignored the signal collapsed. But while empires die, individuals can survive if they understand the pattern. Look at Lebanon. Just a few years ago, banks locked their doors. Citizens woke up to find their savings frozen. The currency lost 90% of its value. But those who saw it coming, those who moved wealth out of banks, who held gold or foreign assets, they survived. This is how collapses happen, not gradually, but suddenly. One day, everything works. The next day, it doesn't. The gold signal gives advance warning, long before the crowd sees it. It cuts through lies, politics, and optimism. It speaks in mathematics, and the math says this system cannot last. Governments have promised far more than they can pay. Pensions, welfare, infrastructure, defense. Meanwhile, tax bases shrink, populations age, and productivity stagnates. The gap between promises and reality widens every year. And to bridge it, governments do the only thing they know: print. But printing money doesn't create wealth. It only transfers it. From savers to debtors, from the cautious to the reckless, from the middle class to the elite. Every new dollar dilutes every old dollar. It's a hidden tax, one most people don't see until it's too late. We saw it during the pandemic. Trillions were printed worldwide, called stimulus, temporary, necessary, but the money never disappeared. It lingered, inflating asset prices, driving inequality, eroding the value of work. The rich got richer, the poor got squeezed. That wasn't an accident. That's how monetary inflation always works. Now imagine this cycle accelerating, wars expanding, debts ballooning, governments doubling down on the only tool they know: more money creation. Meanwhile, gold stands outside the system. It can't be printed, hacked, or defaulted on. Its supply grows just 2% a year, the same as it has for centuries. It needs no promise, no signature, no trust. That's why the world's most powerful banks are quietly hoarding it. They're preparing for a reset, for a world where today's monetary system no longer functions. China is leading the charge, accumulating gold, cutting dollar exposure, urging citizens to buy precious metals. Russia's doing the same after learning that foreign reserves can be frozen in a heartbeat. Even Western allies, Germany, Switzerland, the Netherlands, are repatriating their gold from abroad. They know the script. They've read this chapter before. And yet, most people still think of gold as an outdated relic, something for their grandparents, not for the modern world. They chase stocks, crypto, real estate, anything promising fast returns. They forget that the best return in a collapse is simply not losing everything. The math is unavoidable. If even 2% of global wealth shifts into gold, the available supply would vanish in months. Prices would have to skyrocket to rebalance demand. And when the panic begins, when faith in paper currencies breaks, that shift will happen in days, not months. History moves slowly until it doesn't. Then it moves all at once. Every empire has followed the same arc: rising power, excessive debt, currency debasement, collapse, Rome, Spain, Weimar, and now, perhaps us. The gold signal warns at each turning point. Those who listen endure. Those who ignore become footnotes. Right now, you have a choice. You can believe that this time is different, that modern central bankers have mastered what every empire failed to control. You can trust that infinite money will create infinite prosperity, or you can face the mathematics and prepare. Because collapses don't destroy everyone, only the unprepared. And history's cruelest lesson is how slowly the danger builds and how suddenly it ends. For years, warning signs seem small: rising prices, growing debt, endless printing. Then, all at once, the system cracks. Banks close. Currencies fail, savings vanish. When that cliff comes, it's too late to move. The gold that seems expensive today could be priceless tomorrow. The money you trust could be worthless overnight. Preparation isn't panic, it's survival. Gold isn't a relic of the past. It's the only signal that has never lied about the future. It's flashing now, louder, brighter, clearer than ever. The question is not if collapse comes, but who will be ready when it does. Every empire in history begins with ambition, unity, and an explosion of productivity. The people believe in progress, the rulers believe in destiny, and the system appears unshakable. But underneath every rise lies a hidden flaw: the illusion that growth and wealth can last forever without cost. At first, the empire earns its strength through real work, innovation, trade, expansion, and discipline. Then the wealth begins to flow faster than it can be sustained, and slowly, the foundation begins to weaken. The desire to maintain power and prosperity at any cost drives leaders to take shortcuts, and the economy begins to depend less on productivity and more on manipulation. The first stage of collapse always begins invisibly, through numbers on ledgers and policies in government halls. It starts when expenses exceed income, when the cost of maintaining the empire, its armies, welfare, bureaucracy, and debt, surpasses what real economic activity can support. To bridge the gap, leaders turn to borrowing, creating the illusion of endless resources. For a while, this works. Borrowed money fuels expansion, keeps citizens content, and sustains the illusion of strength. But debt, like a parasite, grows silently. It feeds on the system's future, promising comfort today in exchange for collapse tomorrow. Eventually, the debt burden becomes so large that it cannot be repaid without printing new money. When that happens, the empire begins to consume itself. Currency debasement starts as a policy and ends as a disaster. The rulers convince themselves it's temporary, a short-term solution to maintain stability, but history shows it's the point of no return. Once money loses its integrity, trust follows. Inflation creeps in, purchasing power falls, and the people begin to sense that something fundamental has changed. The rich protect themselves through assets, while the middle and lower classes are left holding money that buys less every month. The political system, in turn, reacts with denial. It blames outsiders, speculators, and crises, never the policy itself. The cycle feeds on fear and delay until the currency, the lifeblood of the empire, begins to rot. When confidence in money fades, the empire's social and political structures unravel. Civil unrest rises, trust between citizens erodes, and the sense of unity that once fueled greatness disappears. Armies weaken, alliances fracture, and the empire, once proud and powerful, stands hollow from within. This pattern repeats across centuries because human nature never changes. From ancient Rome to modern superpowers, the path is identical: a disciplined rise, a complacent peak, and a reckless decline powered by debt and arrogance. Every empire believes it is exceptional, that it can borrow without consequence, that its currency will always be trusted. Yet the laws of economics and trust never bend. The collapse is not sudden but inevitable, built slowly over decades of excess and denial. When the system finally breaks, the world looks back and sees that the warning signs were visible all along, hidden beneath the illusion of eternal prosperity. Gold has always been more than just a metal. It is the oldest form of trust, a silent witness to every rise and fall of human civilization. Long before paper money and digital currencies, gold represented stability in a world driven by uncertainty. It doesn't rely on governments, banks, or policies. It simply exists, immune to corruption or manipulation. Throughout history, whenever societies began to lose faith in their rulers or currencies, gold became the final refuge. Its value doesn't come from decree or design, but from universal belief built over thousands of years. When an empire starts printing too much money, when debts spiral beyond control, or when the currency in people's pockets begins to lose meaning, gold starts to rise. This rise isn't celebration, it's warning. It signals that trust in paper promises is fading, and that the system holding them together is beginning to fracture. Gold speaks in silence, but its message is unmistakable. When confidence in governments weakens, when central banks quietly start hoarding reserves, and when investors flee from currencies into tangible assets, gold reflects that collective anxiety. It is not controlled by borders or laws. Its worth is recognized from ancient markets to modern financial systems. That is why every time an empire begins to fall apart economically, gold acts as the first indicator. It doesn't predict collapse. It records the erosion of trust that leads to collapse. In every major crisis, the Roman debasement, Spain's bankruptcy, Germany's hyperinflation, and even the financial crashes of the modern world, gold's price movement has mirrored the same underlying truth, that human confidence is the real currency, and once that breaks, nothing printed can replace it. Governments fear gold's signal because it exposes their weakness. When gold surges, it means citizens no longer believe in the stability of the system. It reveals what official numbers hide, that inflation is deeper, debt is unmanageable, and the currency is losing credibility. Yet, while politicians dismiss it as outdated, central banks quietly do the opposite. They accumulate it, store it in secret vaults, and protect it as insurance against their own failures. This contradiction tells the entire story. The very institutions that control paper money still depend on gold to secure their survival. In times of chaos, when markets crash and faith disappears, gold doesn't rise because it changes. It rises because everything else falls. It becomes the one constant in a world of broken promises. That is why gold is not an investment. It is insurance against human error. It doesn't yield interest or dividends, but it holds purchasing power when every other form of wealth evaporates. When gold moves sharply upward, it's not signaling profit. It's warning that the system itself is in danger. The people who understand that message survive economic storms. The ones who ignore it learn too late that trust is the rarest currency of all.